I do think it's a reflection of the strong year. 2025 M&A is returning. Not only is it returning, but there's signs that it's going to continue into the year ahead. So that's an important kind of factor when banks are thinking about both how to reward their people, but also how to keep expenses in check. It's a fine line that they're walking. And when they're talking to their investors, at the end of the day, they want to keep their best talent, but they also can't overpay and then worry about down the line if expenses are running in a unsustainable manner. So I think that this 10% average that we're reporting today, now you have rainmakers that are going to be making almost double that. Some people are actually going to be seeing donuts if they're underperformers. So this is, just to keep in mind, an average. But it does signal the strong year of how both investment bankers and traders ended last year.
So, but until, we put out the Jeffrey Epstein offers Ambani a tall Swedish blonde story, this was the top of the list in terms of most read, right? Everyone wants to see who's getting paid and who's not. So how does that break down? I mean, which, aside from rainmakers, are the people who are going to be seeing the bonuses and who isn't going to?
So it really depends on this, again, average across, we reported today, Goldman, Bank of America, but it really depends on the bank. If you dig into not just the bank, but then within the units. So investment banking, if you're thinking about year over year, 2025 was a much better year than the previous time that we're thinking about when deals we hadn't seen the resurgence. So that year over year increase is going to be steeper for investment bankers. But I will say traders, they've been seeing a pretty good runway. 2024 was a great year for them. 2025, even better. So if this volatility continues and they're handling more orders on behalf of their clients, you can expect that the payouts are going to be pretty sweet for those trading desks.
And maybe there's going to be less employees, so there's even more money to go around. With that Anthropic story that they've released a new model around financial firms and the ability to do work there. Do you understand just how advanced that is and if banks are already implementing any of it?
I do think that each bank has their own path forward that they're taking, and they had to do this over a year ago. They really had to create workforces that were focused on how to implement AI strategies within their units, whether that's trading, investment banking. You see that now start to actually come through in some of the earnings. But I do think that as far as what the executives have talked about on earnings calls, that is early days. And so when you think about other partnerships, you mentioned Anthropic, these are things that the banks are going to have to decide. Do you build in-house?
Right.
Do you start to partner? But you're hitting on a very important topic, which is efficiency. Again, keeping expenses down. So if you're talking about paying your best people, you can pay your people more if you're saving in other parts of the business. So this is going to be kind of the biggest hurdle that banks have to deal with moving forward is how do we spend so that at the end of the day we can pay our people more, but maybe we need less people to do more work.